This episode, we talk about a US financial giant's upbeat outlook on Japanese firms. We talk about China's two sessions and GDP forecasts for the year, and look at the Middle East conflict and its implications for financial markets.
Hi, I'm Peter Lundgren, founding CEO at Lundgren's Capital.
And I'm Mel Lopez, Chief Economist for ASEAN.
This is Sound Economies with Mel and Peter, a weekly East meets West podcast by Lundgren's Investor Insights. Join us as we dissect the biggest and most interesting news on economies, financial markets, and central banks globally. Welcome to the show. Hello, Mel. How are you today, and how are you this week? Has it been busy, Mel? Tell me.
Hi, Peter. Of course, it is a much more interesting week than usual. We had a few surprises uh, prop up over the last few days since we last touched base. And yeah, in Manila, we are finishing up on our first magazine of the year. So that's coming out very soon, and we're excited to share it with our listeners and our subscribers, and of course with you, Peter. How about you?
Exciting. I'm looking forward to read the magazine. I have a preview. Yes, it looks good. Yeah, it's of course it's busy. Markets are busy. It leads to more investor conversations, and of course, what is happening in particular in the Gulf and Middle East leads us to simply spend more time. We need to analyze and try to evaluate more than we do on a sort of an average basis, and that's what comes up now and then. That's part of our life. So it's okay, but it's busy in many ways. So these are extremely important topics for investors and a bit heavy, but we'll make it. And let's start up with sort of the lighter and more pleasant story in Japan. Well, what are the people saying there?
Actually, it's here's a very interesting bit from Berkshire Hathaway. So we know it's very popular for Warren Buffett, but his successor is speaking this time. So their new CEO, his name's Greg Abel, and he very recently discussed and justified to their shareholders that why their company is heavily investing in Japanese holding firms. So these are your
Mm.
conglomerates. They're big brands in Japan. So, of course,
Yeah.
these are kind of like their own stock picks. We don't necessarily copy them or recommend doing that particularly, but the direction of investment from a US giant to a Japanese one is kind of
Mm.
curious, especially for their maybe more conservative investors, because why are you investing in an Asian aging economy when you have the US? But it's very
Mm.
easy to see why. So these firms, these holding firms, a lot of them are familiar to us. So they prefer like Mitsubishi, Marubeni, those big names, and it's
Mm.
because even if Japan is giving us the impression that it's stagnating, it's old, it's not much is going on, there is still strong growth, mainly because um, one can see that it's their gateway to tap into the Asian growth story. So
Mm.
in within Japan alone, their growth has slowed or flatlined in the past
Yeah.
few years. But actually, these giants are operating in emerging Asia. So I know all of these brands because I see them here in Manila, for example. And the same can be said for like Malaysia, Indonesia. So it really
Mm.
is their way of unlocking uh profits gains
Yeah.
from Asia as well. And the strategy is paying off. While they are popular for making big bets and moves in big corporate America, here they actually got to realize 130% value appreciation since they started purchasing into these Asian companies. So
Mm.
from that figure alone, it's easy to dismiss or to address those criticisms from within, that, oh, why are you so bullish about Japan when you have the US right here, Wall Street is right here. But yeah, I think
Um,
it also says a lot about the diversification mantra. There could be some resistance, but the direction is clear. One needs to go beyond the US in search for
mm.
growth.
They are basically buying a bit into sort of yeah, globalized stocks. Yeah,
Mhm.
both Chinese and Japanese companies, as you say, they are around in all Southeast Asia,
Mhm.
and they have an easier way to gain from a potential upside there. That's the way to do it as well. Yeah, it's always been interesting to see what Berkshire is doing, of course, and
Of course.
even it's not profit anymore, but still, they have they have a very strong DNA in the company. So yeah.
Yes.
So it's noted. They are bullish. Let's see. The rest of the world might be a bit more vulnerable, but
Uh-huh.
is China punching downwards now? Mel, on the let's say the Chinese leadership today, the GDP expectation is a bit on the low side. Yeah, is it pointing downwards? So what do we say?
They're in the middle of what they call two sessions. So like their Congress and their Communist Party leadership are in session mainly to approve, well, they call it a rubber stamp congress anyway, because of course whatever the Communist Party so decides, it's what happens. And one of those is the tempered GDP outlook for the year. So after a 5% expansion last year, the forecast now, and which will likely be the year end figure, would be between 4.5 to 5%. So to some, that's an admission of the slowdown that's been bogging down activity in China for the last few years. They haven't really con- completely shrugged off the effects of the property crisis from 2022. And consumer demand has been still very soft. And that's why inflation, that's negative. So deflation is not really a good thing because people are buying much less. And the for the year, um they're trying to spin it off as, oh, China is focusing more on quality over the headline figure. But no, not
Mm,
really. We see that there will be a persistent slowdown, and as long as domestic demand remains soft, there really is
mm,
limited boost as far as getting a much faster GDP growth pace for the year. There is a new emphasis given, or a stronger emphasis given, on consumption, so lifting consumption. There have been attempts to provide subsidies in the last two
mm,
years, maybe, to support like families to buy new cars, buy new appliances for their houses, but
yeah.
it hasn't really taken off. And it also creates a dent from the national budget. So it's
Mm,
not as sustainable anymore. And there is a recommendation from the International Monetary Fund to lift consumption as a share of GDP. Apparently, China lags other countries in terms of share. So
mm,
where China's GDP is about 50% consumption. For other countries, it's at 70 to 80%. So
exactly.
that's a huge chunk to chase.
Yeah.
So I don't think it will happen overnight. And this budget could, or this year's spending plans, which we'll know more of in the next few days, will show us if that's a possible goal to achieve as well in the next
Mm.
year. Not in the next year, but maybe in the next 5 years or so.
Yeah, so Chinese households, they have the tradition of being savers.
Yes.
And then you can say this is of course an interesting issue. There's simply no secret that we would be here at Long Queens. We would be really bullish on Chinese stocks. Let's say if the Chinese government or if China as such could lift the private consumption, household consumption. That would really be the
Yes.
key driver for being becoming actually bullish on China. And that's but that's not so easy. And this is interesting. It's where Even a sort of a one-party system where you could say they have all the power in the world, but after all, this is where the individual consumer still
Yes.
has simply has a decision right, yeah, to consume or not to consume. They might in Beijing sort of have an opinion about the consumer should consume more, but it's not so easy, yeah, to get if you can't force people to do something, what do you
Yes.
do then? And if you don't really are using that for in many other areas, sort of getting people to do something by incentive, then you have this bit, yeah, odd situation where people are, yeah, simply holding back. But after all, there might also be a couple of explanation. So we can explain it a couple of ways. China's economy is much more matured than many would see it. It looks
Mm-hmm.
much more like a Western economy
Yes.
in many areas. Not necessarily in the whole China, but in the dominant part and the rich part of China. It's much more Western-like and much more mature. So the wealth is also after all,
Concentrated.
now it is a bit sort of how do we say it? We cannot say among old people, but a bit more matured people. Let's put it this way.
The household
And,
leader.
yeah, sort of. But and the key is and that is obvious that young people they have problems finding good incomes. There are jobs out there, and that is typically low as a really low paid jobs. So to really to generate a good income as a younger person and also have, let's say people start with a low income, but to have any increase in the income if they look 10 years ahead is
It takes
actually a bit
forever.
difficult.
Yeah.
Yeah, yeah. And that makes the younger generations they're squeezed when we come to because that was also the typical age where you consume everything you earn, yeah. And we've done that, all of us. Uh, and and this is what is lacking in the Chinese economy. And actually, if you look into to other matured economies around the world, you can go to Japan, you go to Western Europe, you go to US, it is the same. It's tough for young people to earn enough to actually have the spending spree. And it will be interesting to see if China could deal with that. But it means that salaries have to grow, and
Mhm.
and right now there's a surplus on the labor market of labor force. So it's not so easy.
And even manufacturing jobs are hard to come by because at the
Yeah,
same time, there's also an oversupply in inventory. So before you
yeah,
expand your factories or before you hire new people, you'd have to sell these first. But then again, it's like a chicken and egg problem where who will
yeah,
buy these if people are reluctant to?
yeah, exactly. So we're fairly upbeat on China and the
Mhm.
whole situation. Yeah. Again, what would make us bullish is if the political leadership could trigger the consumption challenge. Right now, it's not so. We can't see it.
Yes.
Yeah, but one of the very important factors we actually look at when we look at China. But what else is the leadership telling us today? Well,
Actually, Peter, the next major thing that's setting more nervousness into the markets, at least those that closely watch China, is defense. So they have said that they will dedicate about 7% of GDP to defense spending this year. That's a tad lower than last year's about 7.2%, but still sizable. In nominal terms, it's still higher, definitely, because of the GDP growth, the rapid
yeah,
GDP growth in China.
yeah,
The bigger concern, they've been very upbeat about military modernization and uh, like introducing more innovative technology into their systems. Uh, we are gonna talk about that in our upcoming China and CN Quarterly magazine, so watch out for that. But there is also growing fears that this defense spending, defense investments would really be towards retaking Taiwan. They term
mm,
it as uh, countering Taiwan's independence. So it does sound a bit scarier when phrased like that. Like
Yeah.
it appears that as if they're preparing to reel in Taiwan and take it back as part of the mainland, which has always
Mhm.
been a big source of jitters as far as market observers are concerned.
Yeah, exactly. Exactly. First, as you say, the 7% GDP spending on military and on the army is nothing new in China. But now, as the West, in particular Western Europe, has more focus on spending and how much to spend on defense, then all of a sudden the 7% is a sizable number, yeah, and it shows a bit about which kind of forces are getting built up out there.
Mm-hmm.
It should be mentioned, it's of course it sounds tempting, interesting that we have our own alternative investment fund
Yes.
that cannot invest into Chinese weapon system or weapon as a
Mm-hmm.
uh, companies or defense companies, just to mention that one. But we of course observe what's going on there. And as you say, we need to consider actually partially on the comments from today, if we consider Taiwan being in a new situation.
Mm-hmm.
That is completely new as a sort of an upgrade. The discussion is always there, but should we upgrade the discussion? Should we upgrade, how to say it, our concern?
Mm-hmm.
That will for us be something we will deal with from today. It's a bit higher on the issues that we're looking at actually. So the comments from China today were actually sizable and very much on the actual economy, and they also made a comment on tech, yeah, didn't they, Mel?
Yes, they actually are planning something bolder for the semiconductor industry.
Yeah.
So we know that they make economic plans in terms of 5 year spans. So they're
Yeah.
launching their plan for 2026 to through 2030 over the next few days. And it's expected that semiconductors will figure largely in their strategy there. So, following the ban imposed by the US much earlier under Biden regarding the exports of high value chips to China,
Mhm.
basically
Yeah.
to prevent them from catching up to US technology. They decided, hey, we should make our own that's able to compete with the Nvidias
Mhm.
of the chips world, just so we're not tied to the US that way. And they are trying to advance that fairly quickly, so it's one of the more exciting things that we're
Mhm.
looking out for in the next few days is how exactly do they plan to do this? Because yes, there are uh, chip makers in the country, in the mainland, but of course the question
Mhm.
is quality. Like, how do
Yeah.
these compare to their Western counterparts? So like the
Yeah.
Nvidias, the Taiwan chips, semiconductor chips, how are they like? Because if you want to keep production in within the country, that's fine, but quality is of course the question. And of course, how would you crowd in these companies to actually come in and say, hey, we're better or we're just as good? So yeah, that's one thing. But also, it also means that China won't be shifting towards more consumption led growth just as soon as we want to see, because it would
Mm.
still be heavily manufacturing driven.
Really interesting subject, and there will be also, if we are looking into what we are publishing of articles, and of course during this podcast, whatever we come out with on individual updates on our China fund, whatever,
Mhm.
we will follow up on some of these issues because some of them are actually pretty heavy. Let's jump to another heavy issue, and we need to spend a bit of time on it. It's the Gulf situation, Middle East, where yeah, everybody knows. the
Mm-hmm.
US and Israel is running a military campaign against Iran.
Quite aggressive.
We have,
Yes.
yeah, we have seen financial market reactions. We've seen the oil price going up. Of course, it's no surprise that oil goes up. It is, after all, heavy share of the oil
So,
global oil production going through the Hormuz Strait of Hormuz. Actually, it's
yes.
predominantly going towards Asia, and it's also why we've seen the biggest effect in the sort of Asian stock markets, and in particular Southeast Asia. If we try to take what we see as sort of what we call a short-term view on the military campaign, is we truly expect that the as Iran's fleet will is probably already completely done and dusted and
Sure.
bombarded. That is the easy part for US to take control and simply make sure that they are non-functional. Then it is simply a matter of firepower and in days, how many days it will take for US and Israel to capture complete control with air control over Iran, to bombard and destroy the complete whatever they have of combat within combat forces within the Air Force. And then the famous missiles, they are easier to detect, and they know, since as a through intelligence
Yes.
to a great deal where they are. So we are actually not afraid of that process. The military campaign will succeed. That is our picture. And we actually also see that US will be able to offer secure passage of the Hormuz, Strait of Hormuz, meaning to protect all ships there. Now, it still leaves the discussion about the drones in Iran. And they are, my God, they are big heavy producers of the drones, and they're actually pretty advanced
Yes.
in what they can do, and also the reach. At least they can fly for 6 hours. The drones will still be around. They're much more difficult to identify. They
Yes.
can start and take off from everywhere, and they can stay below radar sight. So there can easily be a lot of clusters of drones for a period. But they will also be detected during time, and still they can do. It is simply not like a missile, but it still feels like maybe advanced terror attack. That is of course serious enough, but it's not a war. If they come in too high a number in one go, then they are slightly more. So it is slightly more easy to fight them down. And of course, it will be obvious for some of whatever is left over of the Iran military. It's a big army they have, really big on the ground, to try, if US is trying to secure the shipping in the Strait of Hormuz, their drones, it would be obvious for Iran military
Mm-hmm.
to try to attack
Yeah.
with the kamikaze drones. On the other side, it is a limited space that needs to be under control, and that is to the advantage of US. And now we are actually here at Longgreen starting to speak something we know a bit about, as we run our defense fund, and it's a high-tech defense fund. So we actually have in our portfolio in innovations that can detect drones. The key about a drone is you can't really see it as on a radar screen. It's blurry. And then you can have a sort of a two-dimension radar screen system that makes it a bit more clear, but still blurry, meaning they come very close before you see them. When we talk about, let's say, even as the oil tankers that needs to go through the Strait of Hormuz are enormous big. It is a lower or smaller area that needs to be under surveillance, and the U.S. Army Air Force will also be able to use defense or surveillance drones to keep as a several kilometers away from the ships, to have a surveillance about what's going on. So do we trust that the US will be able to make a secure, or a most secure, so let's say 90% secure, trade way for the oil
Mm-hmm.
tankers? Yes, we do. And this is so important. As a this trust or not trust, or say it's possible or not possible, just
Mm-hmm.
means so much for the oil price. And that is the key, and so why we're talking so much about it here, spending time on it. And say, okay, this is what we do see that the military campaign will end because as the US and Israel will simply get the overhand.
And yeah.
Should we conclude on that one, and should we link it to the market reactions? Then we will say that the markets have reacted more than they should now. And are we looking into the Southeast Asian equity markets, we would argue for a rebound. You could also say we would, if you're a short-term investor, would we say it's time to buy some in general? Yes, we would say it is. Do we trust in a low oil price from here? Yeah, we do. And a comment to the headlines in many, many news is we see them as overreacted headlines. They are too heated. They are too loud. They are trying to get people to click on the stories. We know it, clickbait. Yeah,
Yes.
we see the headlines, most of the headlines, as way too loud compared to what the real risk is. Anyway, so this is our view on the situation, and we do not see the Gulf at war at all, and that is it gives us sort of a oh yeah, we need to spend
Y-
2 more minutes on what is going on, what we learn. Again, if we go into a bit more general picture, we learn once more that the world is truly globalized. As a 48 hours of military campaign, and we already see the effects of oil export getting
Quickly,
lower,
yeah.
and it has a negative effect, and airlines not able to utilize the Middle East sort of hub as usual. People are stranding all over. This just shows us how linked the world is. And it can be that some politicians are against globalizing. We can just confirm it goes on and it gets stronger for every day. And that actually also means something for investors when considering the world and investment flows. Um, Further, we have touched the issue before that the Gulf Middle East region has changed completely economically, in particular the past 15 years, also during a longer time. It has become an extremely important economic hub. For
Yes.
real investments, it's really big. For capital raising and capital concentration, it is very important. The whole airline business is extreme. Tourism is growing, and all countries there they have a really expanding middle class. Nobody wants war, and
Mm-hmm.
that's the key. Nobody wants war at all. And that's actually a very fundamental thing. Talking against a Middle East in fire, all these kind of headlines. It's a lot of natural economic forces that will that are peacekeeping actually. But we're still very, very worried about what will happen after the military action that's going on right now. It seems like Trump, he wants to erode the Iran Navy, the Air Force, all the missiles, and then leave again, and then he hope that people will just take over the country and democracy will mushroom.
Like
That's
a
100%
movie.
sure. Yeah, it won't happen. That won't happen. We hope very much that what could happen is maybe a regional peacekeeping force. It could be under the UN, but from the other Gulf, Middle East countries. And we are fully aware of two directions of the Muslim religion can clash. So Iran is Syria and the
Mm-hmm.
Sunni. But this is how we see the world right now. Our concern is what happens after the military campaign. Actually, as US cannot just withdraw without. There'll be a vacuum that will be disastrous. Yeah, so it's how we see it. But actually, we see the current short-term market reaction as should be ended, and it's worth to go the other way. And then we the best solution could be sort of a regional peacekeeping force.
Mm-hmm.
This is how we judge, and this is how we utilize our view and use our view in the recommendations we do to individual clients, how we use it in our funds, and it's the same we talk about here. So, anyway, Mel, we should not forget our sort of our global outlook and how we see the world, and of course, in light of
Mm-hmm.
a couple of challenges. Let's be honest.
Yes. Yes, Peter. When we said just I guess one episode ago that the world is heading towards higher volatility, the markets are facing higher volatility this
Yeah,
2026. Of course, we did not see this coming. We are not uh forecasters in that sense, but what we mean is that the markets are more sensitive to these
mhm,
sources of risk then, and that really explains the sharp reactions from markets the past few days, though
yeah,
what we just discussed is a bit more, soothing, calming as far as market outlook is concerned.
yeah,
We watch these developments with caution. We take note, and of course, from a global peace and order perspective, we want it done faster than later. But yeah, we remain watchful. But as far as opportunities go, we remain upbeat, although we want it to be well considered, and we stay watchful.
yeah. And so we respect the higher volatility we forecast ourselves. But actually, the world is still offering more opportunities than not, and that makes us upbeat. We do not see the current circumstances to reduce risk. Actually, as we will stay with the same,
Mm-hmm.
um, and that's how we see the world. So meaning overall, somewhere we still see the sunshine. Yeah, these are the swings that the world will offer, and we take them. So far, we're not reducing risk. I think that is how we see the world. And, say thank you to people listening, patient with patient today. But we need to spend the time on it. So and thank you, Will.
Thank you, Peter, and thanks to our listeners.
Thanks for tuning in. We'll be on the lookout for market developments worth watching. Catch the next episode of Sound Economies, Mel and Peter on the global financial markets, available on our website and on Spotify.
Here at Longines Capital, we've spent over a decade building a strong track record with our full suite of services and high performing funds. Now we're setting our sights on something even bigger, an IPO in November 2027. It's been a long time coming, and we are ready for the journey. Join us in our next big step. Visit our website to learn more.